It's about to be 2026, and right now is the time to be thinking about what stocks are going to win in the new year. And it's easy to come up with a list of stocks, but it's not always clear on why we're picking those stocks. So today I'm taking you through my top 5 stocks for 2026, using a framework that I have built that clearly explains why I'm scoring each stock. I'm calling it ATS Framework, or Alex's Total Score. So by the end of this video, you're going to know my top 5 stocks, as well as the system that I use to evaluate stocks within my own portfolio. And be sure to stick around to the end, where I'm going to give you my recommendation on if I had to buy just one, which one of those 5 stocks would it be? So before we get into the list of stocks, let me explain to you quickly on how the system is going to work. It's broken out into 3 buckets, and these are the buckets that really drive a stock's return over the long haul. The first bucket is business fundamentals. How is the stock's underlying business performing? Second, stock price. Is the price currently undervalued, or are they pretty expensive for where they're trading? And finally, third is market narrative and sentiment. How are people feeling about things, and what is the current story being told about that stock? Each stock is scored from 1 to 5 across 3 different buckets, which rolls up into a final score at a best of 25. So the first bucket is fundamentals, and 50% of the stock score is weighted here, and it's broken out into 3 different components: earnings power, competitive moat, and execution reliability. The second bucket is price at 30%, and it's broken up into valuation versus growth, and then downside protection. And then finally, the third bucket, making up 20%, is narrative. And the 2 components for that are the 2026 catalyst the stock has, as well as what is the current sentiment for the stock. And overall, the final scores are going to be rounded so that there's no fake precision going on. And don't worry, you don't have to memorize this. I just wanted to lay it out there, and we'll walk through it as we get to each stock and make sure that you're really clear on how things go. So we're also going to start off with 3 stocks that are kind of honorable mentions that didn't make the final list, but I think these 3 stocks should also be on your radar. The first honorable mention is Tesla. And Tesla has massive upside if execution hits, but it really gets penalized for its reliability and downside risk, and it's just a very volatile stock. But 2026 could very well be known as the first year that we really thought about robotics, and Tesla will be a big beneficiary if that's the case. The second stock is Constellation Energy, and they are one of the most important AI-adjacent power plays with their nuclear technology, but their upside is much less explosive than a lot of the tech leaders, and that's the reason I left them off the list. And then finally, it's AMD. So they are the clear number 2 in the chip race. They have real AI upside, but they haven't always hit on their quarters. They have a little bit of execution risk, and their valuation seems to fluctuate a lot, and that was the real determiner for it not making the top 5. But all 3 are worth watching. They just didn't score high enough to crack the top 5 of this list. All right, so now let's get to my actual top 5 list, starting with number 5. And at number 5 is Meta. And Meta is one of the purest examples of AI technology being leveraged to actually increase profitability already. That altogether gives them an earnings score of 4 of 5. For the next bucket, competitive moat, they have billions of users across Instagram, Facebook, and WhatsApp. And this kind of scale is really hard to replicate. And really outside of TikTok, there's not much of a challenge here. This gives them another score here of 4 out of 5. Finally, for execution reliability, they score a 3 out of 5. And their ad business does really well at executing, but they've spent a lot of money right now investing in AI, and specifically within Reality Labs, and this creates some risk from there. Next, for the price bucket, they score both a 3 in valuation for their growth, as well as downside protection. And they have very good cash flow, but like I mentioned before, they have very heavy CapEx spend, and they are also at risk from laws being passed that could be affecting them from a regulatory perspective. This creates a little bit of risk for their stock. In narrative and timing, Meta scores both a 4 for catalysts as well as sentiment. And they had very good earnings last time, and sentiment is really tied into how people are feeling about the AI trade, which I believe is going to pick up too when we get into the next year. And they clearly have big catalysts when it comes to ad advertising because they're already seeing benefits come from increased AI. So overall, This brings Meta's total score to a 20, which is really strong, and I believe this stock definitely deserves a spot in your 2026 portfolio. Now, Meta shows how AI can really drive revenue on the consumer side. And as we move up the list now, we're going to be moving more into plays that are more about the structure of AI that I think are even more for sure bets. This brings us to number 4 on my list, Broadcom. And Broadcom has had a really strong 2025. Their stock has pulled back a little bit as of late, but their recent earnings report was fantastic, showing really strong revenue growth, strong margins, and they continue to show a really large backlog of custom silicone that they are producing. This brings their earnings power score to a 4. For the next bucket of competitive moat, they are the definitive leader when it comes to custom AI chips. And for companies to switch away from them would be very cost expensive. This gives them a score of 4 when it comes to their competitive moat. Broadcom is one of the most reliable companies when it comes to manufacturing. They get an easy 5 in terms of execution reliability because they're somebody that you can really count on to deliver. Next, for the pricing bucket, Broadcom scores a 4 for both stock valuation as well as downside risk. And they are protected by long-term contracts, which makes their revenue very recurring and something that we can count on for going forward. And then the last bucket of narrative, Broadcom scores a 4 for 2026 catalysts and a 3 for market sentiment. They are a very well-respected company. They continue to benefit from extreme spend coming from AI, but they're just not one of the companies that makes headlines, and so they are not hyped, and a lot of people have still not even heard about them. Overall, this brings Broadcom's total score to a 21, just edging out Meta, and they are the definition of stability with really strong growth. Now, as we move up the list, I'm going to be introducing a stock that has significantly more upside, but also significantly more expectations. And this stock is NVIDIA. NVIDIA continues to showcase monster quarters. Their revenue continues to go up. Their margins continue to expand, and even this latest quarter, they raised their future guidance yet again above expectations and continue to just pound the table that the demand for AI is insatiable. This leads their earnings score to a total of 5. For competitive moat, they score another 5, because NVIDIA is not only the leader for their AI chips, they are the leader because of the ecosystem they created. And if customers want to switch away from NVIDIA's system, this comes with tremendous amount of cost. And then finally, for execution reliability, they also score another 5. NVIDIA continues to deliver, and they have the full faith of all of their suppliers because of the amount of cash flow that those suppliers know that when NVIDIA makes a purchase, they are going to go forward with it. Now for the next bucket of price, this is where NVIDIA's score starts to slip a little bit. It gets a 3 in both valuation for growth as well as a 3 for downside risk. Expectations for NVIDIA are extremely high. If they miss at all on earnings, the stock is at risk of a pullback and is really the only thing that you can find wrong with this stock. And finally, for narrative, NVIDIA scores both a 5 for 2026 catalysts as well as a 5 for sentiment. NVIDIA is the AI leader, everyone knows it, and the amount of catalysts that can still come from robotics as well as autonomous vehicles should not be ignored. So overall, this brings NVIDIA to a very elite overall score of 22. It's a must own for your portfolio for 2026. So the next company on this list is a much less well-known, but very deeply entrenched in one of the biggest areas where the AI economy is at a chokehold. This company is ASML. And if you aren't familiar with ASML, they are the world's exclusive provider of EUV machines, the machines that produce AI chips. They have a record backlog with extremely strong demand, and they are the focal point of the AI economy. This brings their recent earnings of very good growth at a 4.5 score. For competitive moat, they get an easy 5, as they are the only company that is capable of producing these kind of machines, giving them an extreme advantage over the rest of the world. And then finally, for execution reliability, they get a close 4.5, only a little bit lower than a 5, just because these machines are so technical and so complicated that they can easily be messed up, even though the company has not had any results to show that. For price, they score a 4 in terms of valuation, and a 4 in terms of downside risk. They've had a really good year in 2025, and they have a very sturdy backlog to support all of the growth that they've seen so far this year. And then finally, for sentiment, they score a 4.5 for 2026 catalysts and a 3.5 for sentiment. There is no doubt that they're going to continue to have a very strong 2026 because of the demand for their machines. But then when it comes to how well known the company is, it's much lower down, and some of the hype that you get with the other stocks is just not going to be there. So overall, this brings their total score over to another elite 22. They are the silent winner of the AI revolution and something that no one has been really talking about. I think they'd be a great addition to the portfolios for 2026. So as we move on to the final pick of the list, we've moved more away from narrative and gotten closer and closer to how integral the company is to structural integrity, specifically for AI. And this company is at the heart of it all. This is where we get to TSMC, or Taiwan Semiconductors. TSMC is the world's leading manufacturer of chips. They have the biggest customers in the world, including both NVIDIA and AMD. They are relied on by everyone because they have the largest EUV machine capacity in the world with a considerable backlog. Their earnings growth continues to reflect this as it continues to pick up with a very strong forecast in the future. This leads their overall score to an easy 5 for earnings. For competitive moat, they score another easy 5 because there's really no true alternative that people can go to outside of TSMC. For executional reliability, they come in with another score of 5. They continue to deliver on massive commitments to all of these big companies that count on them. Now for price, they come in with scores of both 4 for stock valuation as well as downside risk. They trade at a very fair multiple, but they can also get caught up in the AI trade if AI trade continues to go down in any of these moments where we see sentiment kind of swinging. And finally, for overall market narrative, they score a 5 for 2026 catalysts and a 4 for market sentiment. They continue to be thought of as the leading manufacturer for chips, but they are a less well-known name than we see from the other big names like NVIDIA. So overall, bringing this together, this brings them to the best I have today, a 23 overall, and they are continuing to look like one of the best picks you can make for next year. So let's bring it all together and compare all of these stocks using my ATS framework. The first stock we talked about was Meta. It came in with a score of 20, and they have really strong earnings momentum with AI ads, but there is risk from regulatory and the spending that they have going on. As for Broadcom, they scored 21. They are more stable, more predictable. They've got really strong AI infrastructure exposure, and they really do execute. Next was NVIDIA, a score of 22. They honestly have probably the highest upside on this list with elite fundamentals. Their valuation and the sentiment around the stock really continues to swing, and that's something to keep in mind. Next was ASML with another score of 22. Much well less known, but they have a monopoly level moat. So that hype that they don't have is almost an opportunity when we think about buying the stock. And then finally was TSMC. It sits atop the list with a score of 23. It's got the most balanced profile across fundamentals, price, and downside protection. So I think the big takeaway when you look at the names on this list and where they fall is the more central the company is to the AI revolution, the higher I score them and the stronger my belief is that they're going to have an amazing 2026. So if I had to pick just one stock to invest in for 2026, and I know a lot of people would think that I would say NVIDIA, but using what I just put together, my number one pick for 2026 is TSMC. They are not the loudest stock. They are not the most hype stock in the market, but what they are is the most reliable. And no matter if NVIDIA wins, or if AMD wins, ultimately, if AI wins, TSMC wins, no matter who the chips are that people are using in the world. I hope you enjoyed this breakdown and enjoyed the video, and be sure if you did to leave a like, and also be sure to subscribe so you don't miss any of my future videos. Now it's time for me to hear from you. What is the number one stock that you would like to invest in for 2026? Be sure to leave it in the comments below. Really appreciate you watching. We'll see you next time.